Good morning, everybody. This is not the morning show, but it is a show. I'm Spencer Israel. I've got Jason Purrs and Sam Gatlin with me today. Happy Thanksgiving, everybody. The markets, or at least equity markets in the U.S., are closed. We thought we'd hop on anyway and just do a little thing. Maybe we'll go for 20 minutes, maybe a half hour, talk about whatever's on our minds. Maybe gold, maybe biotech, maybe your favorite Thanksgiving side dish. Kind of a free for all today. All right. So, hey, we got some people watching. Look at that. I wasn't sure what to expect because, it being big day and all. But we got Wavy in the house. We got Brendan, Frey, Chris with the beard, Bubby Dub. What's going on, everybody? All right, let's bring on Sam. Let's bring on Jason. Guys, first off, happy Thanksgiving to you both.
Hey, happy
holidays,
Thanksgiving.
everybody.
Sam's coming to us from Greece. Do they celebrate Thanksgiving in Greece, Sam?
They do not care at all about Thanksgiving, no, but
Bummer.
I'm gonna have a good time either way, I miss
Okay.
my family very much, but I'm gonna go out tonight and eat way too much food, probably drink too much booze, and enjoy myself,
Good.
Yeah. JC always says that Thanksgiving is the best holiday. We should have more than one Thanksgiving each year, and I completely endorse that message. One Thanksgiving each year is not enough. We should probably have at least two. If it were up to me, we'd probably have one every 3 months.
Well, if you're Jewish, you kind of get two. We get one in the spring and one in the fall. But in any case, yes, Thundercat asking the important questions. Whatever happened to JC's pie baking stream? That never materialized. It never got off the ground. So maybe next year, guys. Scott wants rare earth metals with assigned chips. We can talk about that. We'll talk about that.
Oh, we got some of that coming. Don't worry.
Yeah.
Don't worry.
All right, so let's just pull up the deck here. Let's go to the infamous slide 2. What is on slide 2?
The new slide 2? It's always the infamous new slide 2.
Oh, that's blank. Wait a minute.
Oh,
we're off to a strong start here already. Hold on.
It's Thanksgiving. Everybody should know.
Yeah.
There we go. How's that one?
That looks good. So here what we're looking at is silver being the massive outperformer, and especially now, Sam and I have been talking about it. Sam put out a great chart. What was this? Probably 6 weeks ago now, when gold started to top out. It was about the volatility expanding. We put that out, talked about the consolidation period right before it happened. Boom, we got that consolidation. We got that pullback. Now it looks like it's moving back into a new uptrend. But overall, what we say as technicians is strength begets strength. And so if we're looking at all this strength in this market, we're not fading it right now. So many people are asking, when's it time to fade silver? It's like silver's up, what's this, 105% since the beginning of this bull market, since March 4th, 2024. Same with gold, 86%, platinum up 65%, palladium up 35%. And then those last recent moves, most of that increase has happened in this last year and in the last 6 months, actually. So, you have these huge moves happening, this continuation of risk on in the precious metal space. So we still like precious metals a lot here. We're still staying long.
I want to clarify. I asked everyone in our internal Slack channel this morning for their favorite, what Thanksgiving side dish should I be investing in long term? And Sam replied silver. And Sam, I did not mean a literal physical dish. Okay, I meant a dish with food on it that I could eat forever. That's what I was referring to. So, but safe to say, you both like silver. Everyone likes silver. Is the bottom line.
We like silver.
Yeah, it's not just that silver's outperformed during this bull market. This is a very small sample. This is less than 2 years. I think you need to zoom out and look at slide number 7, Spencer, because
slide 7. Oh boy,
this bull market for silver is just now getting started. Zoom out to 1980. You have a massive, nearly 50-year base that silver's just now putting the finishing touches on. So, silver has been great so far, but I think it can be a hell of a lot better. If you ask me, I think silver could easily get to 100 from here.
Quarterly candlesticks, though, isn't that a little bit much? It's a little
much. Aggressive, but I think it's appropriate in this case.
I love them. I think it's great because one, it really if you go, okay, weekly takes out some of the noise, monthly takes out more noise, quarterly takes out even more noise. I mean, even look at yearly candlesticks. I look at it yearly. Like I'll look at a yearly candlestick and go, okay.
You're not joking?
I'm not joking at all.
Don't sleep on the yearly candlesticks.
I'm not joking. I think there's such an edge in it because listen to this. Think of it this way. All traders, even funds, like they really focus on month-end performance. So they're creating high frequency trading systems, all these different trading systems based on month-end performance. And so they're trading on the short-term time frame. And then when you extend that time frame, you really find that there's a massive edge there. Now it's hard for people to hang in. There's volatility, all these things. And most people, when they're trading and they're new to trading, they oversize. So they have no idea how to hang on to a big trend. And so when you really take out all the noise and you're just looking at these quarterly, yearly candlesticks, you can just go, okay, that's a massive breakout. Instead of looking at a weekly would tell you this parabolic might crash sometime soon. Quarterly is telling you this could just be getting started. And I think, I'd like to stay in the camp, as long as the dollar's staying weak, I'm in the camp that this is just getting started.
Wow. Hell yeah. Thundercat saying, I'm showing up to Thanksgiving dinner and leaving with the silverware. That's right. Yeah. Stealing grandma's silverware.
Hey, man, I've been there. It's been a long time, but I've been there. We've all been there. But no, for real, though, silver is if you look at metals right now, this is an interesting thing to think about. If you're looking at metals generally, aluminum all over the world, now there's different countries, not only one country. Now it's a few different countries are asking people to bring back their aluminum cans because we're in aluminum shortage. So that's happening. Copper has been in a structural shortage for years. People have been talking about that for years. The metals, we're getting to a point where there's a shortage of these things, and we really need them, especially people are talking about rare earths. Talking about that, we need those for a lot of things at the moment. Especially the AI. AI has changed the entire landscape at the moment, so we need a lot more energy. We need a lot more nuclear energy. Need a lot more alternative energy. So we just need to continue to build these things out, but it's really going to enhance our trades here in silver, rare earths, and copper, and so on.
So it's just safe to say that risk on until silver says otherwise. Is that how we should think about this?
Totally.
Yes. Just a yes. Just a straight yes.
Silver closed at a brand new all-time high yesterday on a daily closing basis. So, it's risk on. Let's go.
All right. Wait. What else do we have here? We have a
we got 500
chart.
Yeah, we got a lot.
Yeah. I don't know where you want to go.
Sam and I come in heavy every time. Don't worry.
I know.
Don't worry.
What is it? This is gold seasonality.
So looking at gold seasonality, this is an interesting one. And part of the reason why Sam and I were talking about the fact that gold could continue to move sideways for a little while, but towards year end, I would be very bullish on gold, very bullish on silver. I think that's the next seasonality chart in the deck. So if we're looking at gold and silver, they have really bullish seasonality into year end and into the beginning of next year. And so usually you see these big moves happen right now, basically until mid-January-ish. So I think we're in that zone here. We're going to see these moves. It's for a lot of reasons. One of those being overseas in China, people give in Japan and different areas, India. Gold is a gift to people, or silver is a gift to people around those times. So you see a little bit more buying, a little bit more physical demand at that point. And so you usually see a nice big move into year end and through the next year. So I think we're right there right now. I think we're going to see this big move continue to happen. That's already started. I mean, to me, I think this has already started. What do you think, Sam? I know you had a great VWAP chart that you were looking at, silver, looking at gold. Do you think the move started again for this next leg up, or are you waiting for it to hit a new high?
Yeah, man. Like I said, silver closed at the highest price ever yesterday. So, yeah, it started. It's game time. Silver not only closing at a new all-time high yesterday, but relative to gold, closing at a new 52-week high. So, if you are a precious metal bull, this is exactly what you want to see. You want to see silver outperforming gold. It's It's gold's crazy cousin. It's the high beta precious metal. It's the risk on asset in the commodity complex. So
And I thought Thanksgiving was known as being a great holiday for crypto, but now we're talking about we should all be buying silver. Forget about Bitcoin, which actually is doing quite well this morning. We should just go buy silver.
precious metals are the original cryptos.
That's right. Wait, can you actually buy silver today? Or
Yeah. Futures markets are open. Yeah,
futures markets are open. Yeah.
All day.
Yeah, I don't know if you've heard, Spencer, but the rest of the world doesn't care about Thanksgiving.
What a society! What a society we live in. All right, excellent.
You could trade silver all the time. That's what we're all about. I'm sure there's a gold store open somewhere.
There must be. Okay, Jason, you put this together. This is an interesting scan. I might say, just because of what's in this. So you've got a lot of commodities in here, right? But then you're looking at like some random stuff. You're looking at some. I see biotech, right? I see dry bulk shippers. It's interesting. Okay, I just bottom line is I see everything is up. Is what I'm taking away from this table.
So
everything is up.
So the table is basically showing like where the strength is. So we're looking at the highest rankings in our universe. So looking at the highest rankings in our universe, like the thing why I brought it today is like if you look at this, you're looking at yes, biotechs are in there, which tells me like there's still risk on coming to the market. These are the stocks that just don't have earnings. They don't have much behind them. It's just a lot of speculation. When I see those moving, I'm going, hey, we're in a bull market. I'm not going to fade this market. I know the pullback, everybody was worried. For me, it was like, okay, biotechs continue to rip. I'm not going to get bearish on this market yet until I really see some major evidence that that's going to change. I didn't get that evidence. We stayed long. Now we're moving back up again. We'll see if that holds. But looking through this whole table, besides that, it's like, yes, it's very commodity heavy. Be Wet, which is the tanker shipping ETF. So that's an ETF that basically looks at tanker rates all over the world and going from China, Saudi Arabia, and so on. And so when we're seeing that make new highs, now this ETF doesn't have a ton of data, but like we're talking about, as long as we're seeing multi-year highs, like that's very bullish. So looking at that, people go, okay, well, that doesn't mean, oil prices will go up. What usually happens is, this commodity cycle always kind of works the same way, which is supply increases lead to demand increases and so on. So this kind of goes back and forth and back and forth. I've explained the commodity cycle just about 1,000,000 times, but, I'll just go to the next part, which is now we're kind of in that point where we're going, okay, we're seeing the shipping rates moving up. When's the last time that happened? Well, we talk about 2020. We saw a big increase in shipping rates. Right near the bottom. And at that point, oil was dead. Everybody hated oil. It was the worst trade in the world. We were going to new energy. Oil prices went negative. Why would you ever want to own oil? And then oil basically rallied from, negative prices. The real next month contract and the spot prices were around $20 all the way to $130. So I think we're around that zone where we're going to see that big move start to happen in the oil price, which is what I would need to see to get very bullish on this space. We haven't seen oil move just yet. So if we got to see that start moving, I'm going to get very bullish on the energy space. And I think we're seeing a lot of reasons to be bullish on it at the moment. Sam and I have been talking about the refiners. Those look great. We've been talking about heating oil outperforming oil. That's also a very bullish sign. So to me, I think that we're due for a nice move in oil at some point. We just have to wait. For me, that level is $80 on oil, CL, the crude oil futures, or it's above 101 on XLE. If we get those breaks, I'm definitely bullish. What's up?
Jason, at what point do you just throw in the towel, though? Because we talked about this for a while, right?
It's been about 6 months, but the reason why, once again, so here's the two different things. So let's explain trading compared to speculating. So if I'm trading and I'm waiting for these levels, that's the trader in me. I'm not just going to buy it if it's in, like, oil looks bad. I'm not going to buy it. But if oil breaks above 80 and starts making new highs and gives me signals, I will buy it. But if we're looking at it in the broad commodity cycle, so we're talking about gold moving first, gold rings the dinner bell. That's not telling me to go start buying copper miners. That's not telling me to go buy lithium. That's not telling me to do anything. It's just telling me that within the next 14 months, I will most likely see copper, and then oil start to move. Then we saw.
I think positioning is a big part of the story too, Jason.
Yeah.
Like you mentioned that I don't know if you have the chart today, but the COT chart of crude oil. I mean, you're seeing really aggressive buying from the smart money. The dumbest money on earth is shorting crude oil, and it's just not breaking down. And if you look at the stocks themselves, look at something like XLE itself. It has the highest short interest since 2020, when crude oil was negative. Crude oil is at $60 today, and the short interest.
Can you look at short interest over the long term though? That's not a long term data point, is it?
I think it is. Yeah,
it is.
Yeah.
Yeah.
Hell yeah, Spencer.
Really?
Yeah. Then I think I don't have the chart today, but Biotech is a great example. Like the short interest in the XBI, the Biotech ETF, is at the same level it was back in 2020. Super aggressive, and this entire time since the April low that Biotech has been screaming higher, you've been seeing that short interest unwind. And yeah, I think it definitely is a good chart to look at over multiple time frames.
All right. Well, you said the COT data showing that short sellers are most short energy or oil specifically.
Oil specifically.
But it's not just that. It's like the whole complex.
The whole complex is being short pretty heavily, but like mainly it's okay, let's continue to play the commodity cycle. Like it's when you're looking at, okay, we bought gold, miners, been killing it there. We bought copper started to move. Once again, it was the same thing before with copper. Oh my gosh, why are you guys talking about copper? Well, it's the next thing that usually moves in the commodity cycle. And then next thing it starts moving, we're making a lot of money there. And now it's been energy. We're waiting on energy, but all these other sectors in energy started to move already. If we're looking at lithium, we saw that start to move. Coal stocks are starting to move. We're looking now. I'm starting to even see fertilizer stocks. It's very sparse, but there's some fertilizer stocks that are starting to move. So we're looking as steel stocks are moving. The whole metals and mining sector, XME, has a big return this year. I think it's around 65%. So like, when people say like, oh my gosh, the commodity cycle isn't moving, it's like everything's moving. It's just like,
no.
I'm not talking about you. You didn't say that. But.
Not even Jason. XLE is the best performing sector by a mile the last 5 years.
Yep.
Right.
Yep.
Like by a lot. I mean, tech is not that far behind, but the rest of them are way down there.
Yes.
Right. It's like it's energy, and then a little bit, and then there's tech, and then everybody else is like down here.
Yes.
Right. They're all bunched up at the bottom.
But that's where the cycle is, though. It's like, okay, we look at all of these things and we go, okay, well, the next thing to move is this. And that's what like people want to know. Like, that's the thing that people want to know. Like, people might get tired of, hey, he's been talking about this for a little while, but at the same time, it's like, that's what people want to know is what's next. And right now what we're doing is we're not just buying like oil. Like people keep writing me like, oh man, look how oil's doing. It's not doing that great. No, we're buying some international names that have actually done well. We're buying the refiners that have done well. And we're waiting on this sector to really buy these large cap names and really get into it heavily. And we want to see XLE really break out. And we haven't seen that yet. So we want to see that get above 97, 98. Nice close above 98. I'd be very bullish on this. And then above 101, it's just going to take off and never look back. This chart basically shows like what I would expect to see in the scenario, which is if I'm looking at TLT, I expect TLT to move down. TLT should move down in the scenario where energy moves up. The only thing that I think could really boost TLT right now is if we're in a disinflationary shock at the moment. I don't think we're there. I don't think that's happening at all. But some people could make that case, and I could make that case. I'd give it like a 20% probability. But I think the bigger probability is that XLE breaks to the upside, TLT continues to the downside, and that's how this trend will actually move. Because really here, what's happening and what's been happening for the last couple of years is that both of these have been stuck in a range. Inflation has been choppy. It's sticky, but choppy, which really shows up in the XLE chart. It's sticky. It's still hanging out up there. And then growth and inflation in the United States has been choppy and inflation has been sticky. So once again, bonds are going to look the way they do. So these are inversely correlated. So I do think that bonds are going to move to the downside, XLE to the upside. over the next probably 6 months, I would say like that we're going to see that move probably happen pretty soon. I would even think it's going to happen January, February of next year.
Okay, I'll circle back with you in a few months then.
We'll talk about it. And if XLE is still in a range, we'll just pretend we'll delete this and we'll move on.
All right, wait. Let's move on. Wait, I skipped a chart. Actually, I skipped this guy.
Oh yeah, so lithium's another one where like it's right at the top of the list right now. So I think it's right behind the crypto miners. So at the moment, I'm looking at lithium. I think lithium's a great place to continue to look. I think there's a lot of trades there. I think the solar sector looks amazing. Sam, you've probably been digging into that probably more than I have. Do you have any thoughts on the solar sector?
Yeah, I think it's a brand new bull market for the solar sector. These stocks have gotten the crap kicked out of them over the past few years, but they have stopped going down. They've had a long period of sideways consolidation, and now they're starting to break out across the board. I mean, you can look at the worst solar stocks, and they're not going down. So, yeah, I think something like First Solar, FSLR, is one of the most interesting charts in the space. It reminds me of the CCJ chart, the Camco, the Exxon Mobil of the uranium space. You know, we were talking about this massive base that goes back to the great financial crisis for a long time, and it took longer than we expected for that chart to break out. But once CCJ broke out, it just skyrocketed to new all-time highs. And now that uranium and nuclear energy trade has really cooled off, and I think solar energy is the new hot, clean energy trade, if you will. I don't know how clean it really is, but I think that's the place to be in that space. And I think breakout in that FSLR chart will really set things off, and the rest of the space will follow, and the upside momentum will really start to pick up. But yeah, I think it's early stages for the solar trade, no doubt.
I have to confess, I did not realize that TAN has held up the way it has. I just looked at it for the first time, and
totally, yeah, these stocks have stopped sucking. That's the first step and doing good. Like, you know, you can't keep crashing 90%. Like, if you want to go up, like, and that's what's happened. These stocks have stopped going down, and they're starting to trend higher across the board. I think Solar Edge is another one of my favorite charts in the space. It's like a $2 billion Israeli solar stock, and that's the cleanest.
The issue with the solar, yeah, when you zoom out enough, you can see that they've all started to base, but when you zoom in, you can see like 4 or 5 false starts right within that.
Right, and that's
I know, because I
think it could be messy here over the short term,
Yeah.
short to intermediate term, but like, again, once that first solar chart breaks out, I think it's game on. Let's go. And you saw what happened in the nuclear and uranium space. Like, once CCJ decisively broke out of that massive base. I mean, you saw Oklo go up 1,500% in a vertical line, and they don't have a single penny in revenue. I mean, that's what you're going to see in the solar space. You're going to see the worst stocks go up 1,500% and be worth $20 billion. Like, that's what's coming. But
is First Solar the largest solar stock by a factor of 10? I think
pretty much it's the Exxon Mobil of the space. Yeah.
I think there's nobody. First Solar is what like high 20, 25, 30 billion dollars, somewhere in that range. There's not another solar stock that's like above 4 or 5. I don't know. Right?
Yeah.
It's kind of crazy. Yeah. They're the only one. They're the Bitcoin of solar.
But if you go through that whole sector, and you know, even getting to uranium, like, this is the issue with like oil. Like, everybody's like, okay, maybe we've moved on from oil, and it's like, it sounds cool, but in reality, it's like, okay, let's say all the energy we need to use. Let's say like also the world isn't using coal power still very heavily, which it is. You know, let's say also we get to this point where we're like, okay, we approve all these new nuclear facilities for energy in the United States. How long and how much red tape do they have to get through to get started? Well, it usually takes about 10 years. So it's like, we're going to be in a period here where it's like, we need any bit of energy that we can get. I think it's why we're seeing the US and all these different countries start investing in these different rare earths and different metals companies, because we're going to continue to see that build over time. But really, it's like, okay, if we need that much energy from all these different sources, we're still going to need oil. In the meantime, we're still going to need coal in the meantime. We're still going to need these dirty fuels in the meantime. But right now, it's like we're just trading the cycle as it comes. We see lithium moving. Solar obviously moves with lithium. We're going to just keep buying these things. But I think it's moving into the energy sector at some point. We'll just see what that point is.
All right. I do want to pivot and talk international, but before I do, good question from the chat. I want to bring it up right now. Jason, are you positioned for any news trades? There was the big headline the other day, Tyson closing a massive plant in, I believe, Nebraska. Right, Sam? You're from there, right? Close enough.
I'm not.
It's not that close.
Tomato, potato, right? Anyway, did I just commit a massive faux pas? Is that the equivalent of saying I'm from New York?
Yeah,
I'm not.
is.
That might or Jason's from Michigan. It might be.
No, it's not the same thing, because I think, isn't Nebraska like near the top of the United States, like closer to the top?
No, it borders Kansas.
It does border Kansas.
So it's not
Yeah,
that
come
far.
on.
I'm thinking of.
I know my geography, guys. I'm not.
I'm worse
Anyway.
at it than most people.
Anyway,
You and I better.
Jason,
I have no idea.
how are you positioned for potential news for any of these trades?
I am not at all. That's
Okay.
the short answer. I am not positioned for the news at all. I do not hedge for these things. However, Sam and I did talk about shorting cattle futures, and we did talk about that early, way before any of that news came up. And it's just because the price action always precedes the news. And like, do I have an edge if I'm sitting here all day and I'm staring at Bloomberg and I get every single news piece? Do I have an edge? Because everybody knows that stuff. I don't. But the edge is actually in, okay, the price is breaking down in feeder cattle. I'm going to take the trade. I don't know exactly who knows what out there, but somebody knows something. Because that's the thing. The market has perfect information in the price. So you're going to see a lot of information in the price. Okay, it's breaking down. Somebody out there knows something. Somebody's selling feeder cattle futures heavily. I'm going to short it because now it's making a signal for me. Let's say a 100-day low, for example. I short this thing. I start getting long some of the grains, which also works inversely. And then that trade's been working out pretty well. So that's the way I think about those things. I never hedge. I never just short things to short things. I think it's a way to lose a lot of money. If the trend is down, I'm happy to short it. I think there's plenty of downtrends to short that people don't need to hedge anything or buy put options that just expire worthless just because you're trying to hedge.
I think it was like Paul Tudor Jones, one of these legendary hedge fund managers, said, like, if you need to hedge, like, you probably just shouldn't be in the position at all.
Yeah.
I think that's the truth.
Yeah.
A hedge fund guy said you shouldn't hedge.
Yeah, because they don't. They really
hedge
hedge.
fund is a very misleading term.
It used to be.
Yeah, I was gonna say that was the original impetus, right? It was,
Yeah.
they used to be.
Well, it's also the fact
Market.
that you can hedge. That's the other thing about the name hedge fund is you can hedge. So back in the day, a lot of them were trading futures. So like I can go long and short just as easy as going long is just as easy as going short to me, which is what that meant back in the day.
Yeah, not so easy for everyone back in the
Yeah.
day. Okay, let's talk international. Speaking of things that are outperforming and going up, most of these markets have been absolutely incredible this year, right? So, what's the takeaway here? We should just be buying South America. Is that what I'm understanding from this table?
I mean, basically, I don't know how else to say it anymore. It's like I've been like pounding the table on Latin America. Like, it's you basically have these countries that are heavily material based countries. They do have a lot of banks, but the banks are mainly invested in agricultural production or material production or something like that. And so
this is the same thing you were just saying. This is pure and simple a commodities trade, and this will unwind if the commodities trade unwinds too.
Yeah, well, it's been unwinding, and that's the thing why it's very fascinating is that this is the thing about me and the way I look at cycles. And what my uncle always taught me is when you look at the cycles, you go, okay, well, you're seeing commodities. We got gold moving, we got copper moving. Okay, great. And then you look at the international trade and you see the international stocks are doing really well. Okay, that's another plus for this commodity style trade. The commodity countries are doing really well as well. Commodity currencies are doing well and holding up. okay, we got all these pluses here. And the dollar continues to move down. Yes, right now the dollar has done this little bounce, and everybody continues to tell me how it's very significant. Maybe it's the most significant thing ever. Maybe I'm just too long term for you guys. I don't know. But for me, I see this massive downtrend trying to make a lower high at the moment. I think it'll make a lower high, and I think that it will continue to boost these Latin American countries and basically countries all over the world, and probably give that boost to the commodity market again, meaning gold, silver, copper, still waiting on oil. But the rest of them look great. A lot of these commodities are really starting to base out. If we're looking at the grains, they're basing out. We're looking at the metals, they're basing out. Not basing out, they're ripping. We're looking at steel stocks, they're moving. We're looking at aluminum stocks, they're moving. I mean, you could look across the board and you'd go, to me, this is all one big trade, which is it's the commodity cycle. We're getting long these things. And I also really like Latin America for a lot of reasons. I do think that it's going to be a place that a lot of people are going to be interested in going forward.
Well, then why is Ireland and Austria, for that matter, so close to the top? That's interesting. In Greece,
same thing. So it's all a weak dollar trade. Like
Okay.
It's all a weak dollar trade at the moment. And, you know, in the weak dollar cycle, you'll start to see these things like international, like we were in the longest strong dollar period, which is the reason why everybody hates international right now. We were in the longest strong dollar period ever, basically from 08 all the way, really 11.
Yeah, it was awesome.
Yeah, strong dollar period. So nobody wanted to buy anything international, and like that's fine. It makes sense. Like we were making a lot more money in the United States. Now we're in a weak dollar period. It looks like we've headed into a weak dollar cycle. So you do want to really look into
Well, wait, weak dollar or weaker? There is a difference.
weak dollar cycle. We're still, the dollar is still weak. Is it going to get weaker? I think so. I think we're headed a lot lower in the dollar going forward, but it's going to take some time. It's not going to be a straight down trend. But if you look back at the beginning of this year and that huge, massive down move that happened, like that's a big structural change. And if you look at the commodity cycles, and if you look at the shape of the yield curve, which I think I brought one of those charts. If you look at CRB, it would be CRB and the yield curve below it. And so I could explain this a little bit better.
Yep, I got it.
Okay, sweet.
Right
Spencer's on it. Yeah. So if we're looking at this, so these type of periods where we're seeing the green arrows, these usually lead to weak dollar periods. And what that means is when we're looking at this, where the green arrows are, this is called a bull steepening. So a bull steepening is basically when the Fed is, let's say, they're either not doing anything with rates or they're lowering rates, and the long end of the curve is higher than that short end of the curve. And so what that creates is more lending. So the banks lend from the short end of the curve, meaning they're giving out money from the short end of they're loaning money from the Fed at the short end of the curve. Let's say they're around that zero rate that we used to be at for a long time. They're getting it around zero. They're able to loan it around that 30-year rate to other people. Let's say back when it was zero, let's say 3%. So they're making the middle on that. So they're making a lot of money. So now that curve is steepening once again, they're making money once again, which means they're loaning money more, which means there's more dollars out there. What that creates is a weaker dollar. So if we have a weaker dollar, that usually leads to commodities moving higher as a whole. Now, this is a very energy-heavy index. Obviously, if there was a lot of gold in it, this thing would be breaking out and ripping. So it's an energy-heavy index, but it's making higher highs, higher lows on a short-term time frame. Long-term, it's kind of flagging out, looking for that breakout. It's got a massive band squeeze, so the volatility is dead in it. If this thing breaks out, like I don't think it's looking back anytime soon. But once again, this is why we put these on our radar, because it's like, as a trader, it's like the way I do it, I'm sitting here, if I'm looking at a trade like this, and let's say you can't buy this index, but let's say you're just buying this index. I think there's DBC is one Sam definitely writes about a lot. So if we're looking at DBC, I would go, okay, where's the breakout zone? Okay, I'm going to put a buy stop above this breakout zone. And I'm going to walk away. Yeah, I can speculate. Yeah, I have opinions. Yeah, I have things, but that doesn't mean I'm buying something. I'm going to wait for that breakout to happen, and then this thing's going to take off. But that's why you want it on your radar, so you can set that buy stop and be ready for it, or at least have it in your chart book, be ready to buy it when it happens. So I definitely think that this is a weak dollar cycle. I definitely think that the commodities will continue to move just in the way the cycle's moving.
All right, I have nothing to add to that.
Bonds
wait,
are sexy. People love talking about bonds. Like, there's probably like a bunch of people in the audience who like fell asleep already, but like bonds are awesome. And when you really
wait.
understand bonds, you understand the market.
That's true. I have to commit several hours, many hours probably, to just like internalizing bond market information so I can relate it to the rest of the stuff, because your bond market is a smart money for a reason. What other charts do we have here? So this is a COPX versus equal weight. With why is Chile below? Just to show the relationship.
Well, Chile has a lot of copper, Spencer.
Well,
I don't know if they're like the largest copper producer in the world, but they're up there, and the economy is very much driven by the base and industrial metals theme. And yeah, you're seeing Chile break out to new 5-year highs, and you're seeing copper miners relative to the broader market break out to decade highs. So I think both of these themes are here to stay, and they're going to continue outperforming for the foreseeable future. I think we were just talking about Latin America and how they're outperforming, and I think you want to look for the areas that have more exposure to base and industrial metals, very much like Chile. I think those will be the best places to be in Latin America going forward, because I think this is the early stages of a boom in the base and industrial metals. Jason and I always talk about how the commodity super cycle works. It goes precious metals, then you get the base and industrial metals, and then you have energy last. And we've very much seen precious metals take off. We started the show talking about how silver's up over 100% over the past 16 months or so. And now you're seeing massive breakouts across the board in base and industrial metals. And that's very much benefiting these Latin American countries that are digging these minerals out of the earth.
Yeah. And so Chile is definitely an interesting one. I mean, it goes with the whole Latin American theme, which is, we're looking at basically these countries that have zero or little tech in their portfolios or their holdings, for example. And we're looking at those and going, okay, these are the areas that are starting to show relative strength. We're starting to see them move up the leaderboard. And really, like, that's where you want to be positioned if the dollar is going to continue to get weaker. And I do think the dollar is going to continue to get weaker. I can't see any reason. I mean, if people think the Fed's going to come in there and like raise rates sometime soon, yeah, maybe take the opposite side of the trade. But if the Fed's going to continue to be dovish, even talk dovish, I think we're in a scenario where you want to be positioned outside of the United States, not because the United States is going to do terrible. It's because you're going to outperform. And that's what we've been doing all year long, is outperforming. Like, whether we're buying the gold miners, whether we're buying these international stocks, whatever it is, like, we're outperforming because we're playing this weak dollar cycle. Whether you think we have a nice bounce here or it's going to turn up, like, the weak dollar trades are still working and making the most money.
What else we got here? Oh, we got bios. Okay, yeah. Now let's get to the junky stuff.
I was excited today. I was like, I get to talk about like all, because Sam knows, like, sometimes when Sam's not around, like, I get real out there, and like I always tell people, Sam keeps me on point, because sometimes when it's just me by myself, like, I'll be like, all right, biotech, then we'll talk about gold in 5 seconds because I think they're connected in some way. But today I was like, oh, we could talk about everything. We could talk about anything. We could talk about stocks. We could talk. I love all this stuff. So phenomenal. So here we're talking about biotechs. Something I posted. This was on the chart report. Thanks to the chart report for sharing this. But this was something that, to me, is just saying risk on. It's just screaming risk on. And when you're seeing this type of a scenario and you're looking at the rest of the market and you're like, oh my gosh, the market's red and we're having all these down days and all this stuff, and biotech continues to rip, just be bullish. Like, I people have written me and said, like, there's these reasons, and 2000 this happened. It's like, no, the shape of the market is the way it is today, and which is very different than it was back then. The way it is today is we're seeing like the most risk-on sectors moving under the surface, whether we're looking at, and the big tech names, if we're looking at the Mag 7s, like, they were getting hit, which was putting most of the pressure on the market. but there was some underlying strength there, and this was one of the strongest areas, which screams risk on. So I love the idea of continuing to look at things like XBI for your bullish signals. I think that's going to help you guys out a lot. Same with SMH. If SMH is holding up, and let's say it's holding trend, and let's say biotechs are ripping, like, be bullish.
Totally. I ran a freshly squeezed report yesterday.
Oh yeah, let's pull that guy up.
This is just a small sample size. There's like 25
I'm seeing
names
a
on this
lot of biotech on here.
and that's the theme, Spencer. Yeah, like I'm showing you 25 names here, but out of, I think the universe is like somewhere like 400 names. Man, I want to say like 75% of them is biotech, and they are red hot. I mean, I could show you 50 biotech charts that are super actionable with amazing risk versus reward. It's just skewed in your favor. I think biotech is by far the fattest pitch in the market. I mean, these stocks are absolutely ripping. And I think another beautiful thing about biotechnology is it makes investors uncomfortable.
Yes.
People can't model a biotech company like they model NVIDIA's cash flows. And that makes them really uncomfortable. And people, furthermore, don't understand the science for the most part. So
also true.
I think there's a lot of things that make investors uncomfortable, and that there's just like a systematic under ownership of biotechnology stocks, and you're starting to see that unwind, and it's really, really dramatic. You're seeing these stocks go vertical across the board. So
just to understand this is a table you guys do twice a month, and this is just a ranking of stocks with a high that are basically ripe for a short squeeze, right? High.
Yes, and we're looking here at the stocks that are actually getting squeezed. As you can see, this table is
so these are being squeezed. Now,
yeah.
Sam, this is what would concern me. If I saw that a biotech had a very high short interest, right? I would assume, and this is unique to biotech and no one else, I would assume that they knew something about the science, because why else would they be short the stock?
Yeah, and that's a good point, Spencer. Yeah, there are smart people out there that definitely get these stocks right, and I'm not saying they can't go down. Like, yeah, but like it's just across the board. You're seeing extreme short interest, and you're seeing insane returns. So, the short sellers aren't always right, Spencer. I think they can get their heads handed to them, and that's what we're seeing right now.
Yeah, so this is a table of stocks that are in the middle of a squeeze, meaning they are ripping. So shorts are getting their faces ripped off at the moment. But it would scare the crap out of me knowing that I don't know, Nuvation Bio had a 27% short interest, right? I would just presume that one of those shorts at least knows more than me, because I know nothing about the pipeline or about the science, about anything.
Totally. And I think that just, it comes down to position sizing and managing risk responsibly, because, these are biotech companies, and they can gap down 50% overnight. Like, that is very much in the cards. So like, you need to position size responsibly and have a diversified basket of these stocks. You can buy something like XBI that owns, I don't know, 150 biotech stocks equally weighted, but I prefer to just build my own basket, find, I don't know, 25 names that have beautiful charts, and just build my own basket that way. And that really takes out a lot of that binary risk.
Price is the price. At the end of the day, the price is the price. And if you're going to take the trade, like, you take it based on price, and you're a technician, like, just do it. And if you're seriously, just do it. Like, it's not I understand the sector so much. Like, if you're a real technician, like, you understand the volatility of the product, you understand your position sizing, and you go into the trade based on, let's say, a breakout, whatever it is, mean reversion, however you trade, and you just take the trade and you shut up, because you just don't know the future. I wish I knew the future. That would be great. But nobody does. And because nobody does, you just take the trade. And let's say, like Sam said, you build your own basket. You take 10 of these. How many of these do you think went down 50%? One?
At one point or another, all of them.
I'm talking about like in the next trade. Like you're taking these trades based on breakouts. Like what happened recently? We just got a breakout in the last couple months.
Yeah.
But
Let's
say you take it. Yeah, let's say you just take it now. Like you're probably looking at one or two. Like if you're a trader, like are you holding it? Like what I tell you to buy? What I say Spencer, buy these biotech names for the next 10 years. Hell no, I'm not crazy. Yeah. But what I would say is, if you're a trader and you're trading them like on a multi-month time frame, like you just trade them.
Yeah. All right. Don't be scared, everyone watching. And Spencer. Okay. Well, I like these next few charts. They're sort of splitting hairs a little bit, but I like them nonetheless. We're looking at the relative performance against between two leaders, right? Nvidia, Broadcom, two of the best performing stocks in the S&P and two of the leaders in the market. I don't look at this too often, and like I said, I do think it's splitting hairs a little bit because they're both awesome. So, what is the value? And then there's one more after this. What is the value of doing of looking at a chart like this?
Yeah, for me, it's just picking leadership inside of semiconductors. For years, Nvidia has been the best semiconductor stock in the solar system. It's been incredible. It's gotten up to like a $5 trillion market capitalization. It's one of the greatest companies ever created. And I think Nvidia is probably going to be worth $10 trillion probably before the end of this decade. But, that doesn't mean I want to own it. That means it just means I'm bullish on semiconductors, and I want to look for leadership in that group. And right now, Broadcom is the leader relative to Nvidia, which is, like I said, one of the greatest stocks ever. So I really like the Broadcom. It's been happening all year. So
should this get filed under like this is interesting information department? Like this is
yeah.
This is just interesting information.
Don't overthink this chart. I'm just I think it's interesting to note that Broadcom is better than Nvidia.
I mean, same with this one too. It's like you're talking about two of the largest retailers in the world, right? And so Costco was on like an epic run. It's had a pretty tough year. Walmart's been on a tear of late. So of course, Walmart is outperforming Costco, which this chart shows clear as day. But again, it's really just more like, that's interesting. That's kind of how I think about this.
Yeah. And you see, if you look at, I don't have the absolute chart, but if you look at Costco in absolute terms, it's at the lower bounds of a pretty textbook distribution pattern. And based on the way that Walmart is trading, I have a hard time believing that Costco is just going to resolve that top and enter some nasty new bear market. I think it's going to catch a bid here, dig in, and I think Costco's a decent buy down here. And remember, Costco is an amazing company. Like who was it? Charlie Munger talked about the virtues of the Costco business model. I think that's such a beautiful piece he put out a few years ago. Because Costco truly is one of the greatest businesses of all time. They haven't figured it out, Spencer.
Costco had a 3-year epic run, right? Just epic. So it's done nothing for I guess over a year now. Wow, I didn't realize it'd been that long. But still, companies as large as Costco just can't always go parabolic like they did. And this one did go parabolic, right? So I say this as a long-term shareholder. You just got to let it ride sometimes, and not overthink. Not overthink 13 to 14 months of sideways action because, it can't always go up. This thing went up. This thing literally went parabolic. If you zoom out, you can. It's crazy. The stock was Costco was $100 in 2017.
How long have you owned the Costco, Spencer?
Not that long. I've only owned it for it's been less than 2 years. So,
do you plan on ever selling it?
No. I bought it. I bought it and then I sold it, and then I bought it and then I was like, I shouldn't have done that. So then I bought it back, And I don't intend to sell. So
I mean, it's great. It's a great place. I have a Costco card. It is pretty amazing. So at the same time, like I get it. It's a good company. It'll probably be around for a long time. Something to have in the retirement portfolio.
Yeah.
Maybe hand down to your kid one day.
yeah,
Totally.
and
Like
also
if these, I'm here in Athens, Greece. Like if I think this place would blow their minds. It's like so American, like the
Yeah.
Costco.
I would very
Huge,
much.
big
I would.
box
I
store.
would love to go to Costco overseas. They have very different. Obviously they have different offerings, and I would love to experience a foreign Costco. Maybe one day. I'll put that on my. I'll do a Costco trip around the world. Costco Japan, Costco Shanghai.
Nice.
We'll see. Okay, guys. It is wow. We've been live for almost an hour. Can you believe it? I cannot. I don't want to go too long. It is a holiday after all, and we do have places to go, people to see, food to eat. Any final words before we hop off for the day?
Don't have
I just wanna
much.
thank everyone for coming. I mean, what a
Yeah.
turnout we had
This
here.
was fun. I didn't know what to expect.
Yeah.
Sam, I didn't know you're gonna be here until like an hour ago. So
Yeah, I did tell I did keep Sam informed because we didn't even know, like, really. Spencer, I was hit up Spencer. I was like, let's do a show, and Spencer was like, yeah. And then like we hopped on, and other people were like, maybe. I was like, Sam's down, I think. So Sam, we and him already talked about it.
this was fun.
Yeah, I'm so glad Sam made it. So glad we did this, and thanks for everybody for joining us. This is always a lot of fun. Spencer and I have done a couple of these like holiday get-togethers, which has been a lot of fun. And so it's exciting to just get on, hang out with everybody, talk markets, and then enjoy your holiday.
Yeah. And I should mention, if you want, that freshly squeezed, that scan, and the ideas that go with it, that's the important part. The scan is fun, but the ideas are what matters. Get AAC Premium. The link is in the chat. It's been on the screen at various points throughout the show via QR code. Black Friday offer, which runs, I believe, through Monday, 50% off an AAC Premium subscription. Every subscription comes with a 30-day, a 14-day money back guarantee. So you try it for a few weeks. You like it, you don't like it, it's fine. Oh no, it is 30 days. I'm confusing Kenny and AAC Premium. What am I talking about?
Yeah.
So regardless, Black Friday is here. We like it, you like it. Get all the research. Okay.
Try before you deny. That's what Spencer was trying to say.
That's
summarized.
That's right. Thank you for watching. I did not know what to expect, but we had 100 people watching us on YouTube, so that's pretty cool. Have a great rest of your day, everyone. Sam, enjoy Thanksgiving in Greece, and we'll see you stateside in a couple of weeks. That's what I got. I don't know.
All right, guys. Well,
Happy Thanksgiving, everybody.
Thanksgiving.
How should I end this? Should we end this with like a? I don't have any Thanksgiving themed outro videos.
What about Christmas? You got anything for Christmas?
No, I don't have anything for Christmas.
Then heavy metal. Heavy metal usually works great.
We can play some music. We can play ourselves out with some. You want metal? Do they have any metal here? I don't see any metal.
Hard rock list.
Let's see. Let's do a little like R&B to play us out. All right.
All right.
Let's see what we got.
I can dig it.